Gold's up $6, 2669. So still a golden year for gold. And the reason gold's going up, even though the dollar's strong, it's all in your trends journal. It's because the fears going on around the globe on the economy and geopolitics. And crypto's down to 92,000. They're down, 10,000 from their high, but still way up. Bankruptcies in U.S. soared a 14-year high as rates bite. This is from the Financial Times. Not a word about this.
In today's news recap, gold demand in India slows. Lunar New Year fuels interest in other hubs. Gold discounts in India rose this week as consumers refrained from buying as local prices hit a month's high, whereas the upcoming Lunar New Year festival stimulated gold buying activity in other major Asian markets. Indian dealers offered a discount of up to $17 an ounce to official domestic prices, inclusive of 6% import and 3% sales levies, up from the last week's discount of $14 an ounce. Prices are high, so buyers are holding off on purchases. Anyway, the inauspicious Car Mass month in Hindu calendar is still going on, an Ahmedabad-based jeweler said. Jewelers were on the sidelines due to volatility in the Indian rupee and overseas gold prices, said a Mumbai-based bullion dealer with a private bank. International spot gold prices hit 4-week highs this week. In China, the world's top gold consumer, dealers quoted discounts of $2 per ounce to $9 premium on spot rates, down from the premiums of $4.50 to $10 charged last week. The year of the snake approaches, arguably an auspicious year and a perfect backdrop for further gold purchases. Independent analyst Ross Norman said Chinese investors will be encouraged by news that the PBOC have added gold to its reserves for the second month in a row, which may suggest the current price reflects fair value. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your gold and silver gear, from t-shirts to hats, designed by stackers for stackers, premium quality, shipping worldwide. Let us know if you'd like any specific designs, and remember, mine is bigger than yours. Let's get back into the episode.
U.S. corporate bankruptcies hit their highest level in the aftermath of the global financial crisis, as elevated interest rates and weakened consumer demand punish struggling groups. Oh no, everything's fine. Everything's fine. Immediately slashes tariffs to bring down high prices. Slashes tariffs. Wait a minute. He's Trump's buddy. Trump's want high taxes. Oh, so now he's telling the Argentinian people, we're going to bring in more cheap products for you. That's right. So the manufacturing goes way down, wages go way down, but the products are cheap. Again, it's the opposite of what Trump is saying. And by the way, I agree with tariffs, and I agree with Trump on that. Because you go back, once upon a time, there was no such thing as income tax, stealing our money. They got the money from tariffs for the government. And as McKinley said, the president at the time, what do you want? Cheap products or high wages? And I believe in a self-sustaining economy. We have the human and natural resources to make the products in America. I want to get the prosciutto from Italy. I want to get that fine wine from France. But the other stuff we can make here. So just to point out the hypocrisy of this guy. UK long-term borrowing costs highest since 1998. The yield on the 30-year gilt touched 5.25% yesterday. They say the UK is in a period of stagflation. That is total bullshit. It's in dragflation. The economy's going down and inflation's going up. You're not allowed to say drag because they're gay. Gayflation. They're in gayflation. Yeah, the UK contracted for the second straight month in October. I mean, it's yeah. This tiny little article in the toilet paper record today. Eurozone ends 2024 on a downbeat note. Look, tiny little nothing. I'm telling you, as I said, why gold prices are going up. Because the people in the know how bad things are.
In today's news recap, UBS stays bullish on gold for 2025 as central banks fuel demand surge. UBS predicts gold's 2025 rally could defy rate cuts and a strong dollar, fueled by central bank demand and economic uncertainty. UBS, the Swiss multinational investment bank and financial services giant, has offered an optimistic outlook on gold for 2025, despite the metal losing some momentum in December following the U.S. Federal Reserve's hawkish stance. During its policy meeting in 2024, gold surged by 27.6%, marking one of its strongest annual performances in over a decade and surpassing the S&P 500's returns. While the Fed's tone caused short-term headwinds, UBS analysts remain confident that gold's upward trajectory can continue into the new year, supported by structural economic factors and ongoing central bank demand. We believe gold can build on its 2024 gains. Although U.S. rates may fall less than expected, they are still on track to decline. UBS's chief investment office highlighted central banks' significant role in driving gold demand. The forecast reflects increasing diversification and de-dollarization trends among global central banks. Despite potential challenges, including fewer anticipated rate cuts and a stronger U.S. dollar, UBS maintained a positive stance. Reflecting the shifting economic environment, UBS lowered its 2025 gold price forecast by $50 per ounce. The bank now projects gold will reach $2,850 an ounce by the end of 2025, down from its previous estimate. Despite this downward adjustment, gold was trading at $2,639 per ounce as of last week, indicating UBS still expects the metal to rise, albeit at a slower pace than initially anticipated. Before we dive into the best clips of the week, don't forget to smash that subscribe button and check out our pinned comment for exclusive VPN offers. Protect your online privacy with NordVPN, the fastest, most reliable service to secure your data and keep prying eyes away. Plus, if you're a stacker looking for truly independent market insights, visit goldsilverstacks.com for the Stacker's Handbook, a comprehensive guide packed with strategies to safeguard your financial future and take control of your wealth. And by popular demand, we've launched our print-on-demand gear for gold and silver stackers. From stylish apparel to unique stacker-themed accessories, it's the perfect way to represent your passion for precious metals. Premium quality, shipping worldwide.
Financial outlook, the business remains grim. The national office vacancy rate for primary markets ended 2024 at a record high of 20.4%. Moody's reported. The delinquency rate of debt backed by office buildings converted into securities hit 11.01%, the highest since the firm TREP began tracking it in 2000. That's it. Nothing else. 2000. Oh, you mean the dot-com bust? Happened? Oh, and then the panic of '08? Worse than that. Worse than that. We're the only ones that are telling you what's going on here with our office building bust. No one is reporting it. They're trying to pump it up. You got a 20% vacancy rate. Nobody there. Nobody there. How are you going to pay your debt? It's going to get worse. It's going to bring down the banking system. No one's talking about this. The office building bust, bank on it. It's a ticking time bomb for banks. Remember, go back to 2023, 2 years ago. What happened? Signature Bank, Silicon Conman Valley Bank, First Republic, 3 banks went bust. Boop. Markets went way down, gold went way. That was 3 banks. They're covering this up. They don't want the people to know how bad it is. 41% of companies worldwide plan to reduce workforce by 2030 due to AI. That's from the World Economic Forum survey. Again, each week in your Trends Journal, whole sections on AI by Joe Duran and Ben Davis. We're giving you what everybody needs to prepare ahead. You know, each week we have how the bigs keep getting bigger. And now we said with Trump in there, it's going to keep escalating. You ready? Blackstone buys accounting firm stake at $2 billion. Cintas bid $5.1 billion for UniFirst. Sixth Street strikes a deal to manage insurers' assets, $13 billion. Smaller companies are rosy on M&A. Insignia Financial receives takeover proposal, $1.8 billion. Goodyear to sell Dunlop to Sumitomo in Japan. Honeywell partnership to develop aviation AI. Getty Images to merge with Shutterstock. Paycheck to acquire competitor Paycor HCM. It's only a $4.1 billion deal. You got it? The bigs own everything. The billionaires are in charge of everything. Private equity groups. You know, fuck off with this shit. Crime syndicates. Oh, need more proof? Private equity role in healthcare blasted. The U.S. Senate committee accused private equity healthcare investors of choosing profits over patient care. Oh, yeah, what's going on with that guy that shot that other guy? Yeah. People are fed up with this stuff.
What do you think about Gerald Celente's bullish stance on gold? Do you agree that it remains one of the top trends heading into 2025 despite the recent sell-off? Share your thoughts in the comments below. We'd love to hear your perspective. And don't forget to like, subscribe, and hit the notification bell to stay updated on all things gold, silver, and market trends. Thanks for watching, and we'll see you in the next video.